Good Friday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. Want to start with the disclaimer. It's up there for everyone to take a look at.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And let me share my screen. Bless you. I know you put on mute, but I could see. That was a healthy.
I did want to say something. I don't know if you know that I don't have my typical Think Big white t-shirt on today. I'm wondering if you want color combination, why I have it on today.
Why you have the red and blue?
Red and blue, yep.
All right, you're gonna have to help me out here.
All right,
think that fast.
Fly Phillies fly. We have Phillies playoff starts tonight. All the kids were saying we had to wear blue and red today. So
okay, that's tonight, the first game,
right? I think the first game is tonight.
Yeah. Well, I could tell. I live down, I live in Center City, Philadelphia, and when they won that last game, it was like it was really like, I live in a high floor. It was very loud. Like one of the loudest I've heard, the cities. I mean, people were outside like cheering. There are a lot of like sports bars and stuff. People just kind of filtered out to the streets. So it's really, if you're in Philadelphia, a lot of excitement around.
Not to go in a different direction, but I live in the suburbs of both New York and Philadelphia. It's an interesting area because you can get to both cities.
Yeah.
When you live in the suburbs, the way people, particularly moms with kids, talk about the cities is that they're very scary, much so than I ever remember. And I don't know if it's the news media. I know crime is up. Living in the city, and Philly's one of the ones locally that they talk about, obviously, because it's the commuter city in. Is it any less safe today than it was when you moved to Philadelphia?
It doesn't, maybe at times it feels, not on a day-to-day. No, I wouldn't say like on a day-to-day basis, I feel like, oh, it's unsafe. And, my kids actually walk to school. They walk together to school. We let them do that. I mean, my wife tracks them on the phone. So I don't feel like, it's not that scary. Like day to day, you walk out and it's normal. Maybe there are certain times at night when there are less people you wouldn't want to be around, but that's like everywhere. I feel like that's always been the case some if it's at nighttime, it gets dark, not a lot of people around, and then you do get some people are walking around drunk, and it's the city. Some people are walking around strung out on drugs, and that makes it feel a little bit, but during the daytime you don't feel that because there are a lot of people out there, a lot of crowds. And you have a place actually on Rittenhouse. So you lived in the city. We lived,
and Philly has changed so much in the 30 plus years that I didn't grow up in or around Philly. So I moved to Philadelphia. And then when I got the floor on the job on the Philex with Timber Hill, it was interesting. This was the mid to late 90s.
Yeah.
No one lived downtown. Downtown was like we had one, there was one, I don't know if you remember, bar restaurant by the Exchange. I think it was called the Irish Pub. Yeah. But like people would go there for a happy hour on Friday and then just depart from the city. It wasn't until the 2000s that restaurants opened up really around Rittenhouse Square. And then you walk anywhere from Rittenhouse Square to the river now on both sides, whether it's Schuylkill or the Delaware, and there are restaurants and people out all over the place. So it seems to me like when you go in, there's a lot going on in the city, way more than there was in the 90s. But listen, crime is up. The video footage of what's going on in the cities is horrible, but I just wanted a perspective from someone who lives actually in one of the cities, and I live in a suburb around it.
Yeah.
And you listen to people out here and they think, people are getting shot on every street corner, right?
Oh yeah, I have friends who surprisingly don't want to come downtown and meet us for dinner. They think it's not, it's unsafe, and
Yeah, like
it's not like
again,
that.
everyone's got to be safe and have their own,
Yeah,
threshold. But for a lot of
yeah.
people, the benefits definitely outweigh the risks around cities. But anyways, enough with that. I just wanted to get your perspective.
All
So
right.
what's going on in the pre-market?
Yep, we'll take a look at the pre-market. If you guys have any questions, put those questions in the live chat on YouTube. Will's watching you. He'll read them back to me. If you want to come on a show and ask a question directly, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you get to Zoom, click on raise your hand. You don't have to turn on your video camera. It'll prompt you. Once we let you in, everybody could hear you. You could ask the question, navigate us to what you're looking at. It could be a question on data, analytics, strategies, tools, anything you'd like to discuss, maybe bring up our attention or the rest of the community. You're welcome to come on the show and do that. While we're waiting for any questions to come in, we'll start out with the pre-market report, and we are near the end of the month. So what we'll do is take a look at how the market performed, SPY performed, month, end of month, or almost end of month here, up to now, and we could compare that to historical averages, and take a look at November, see what's going, what do we think November can bring, because earnings season is going to start winding down. We're going to start heading into the holiday seasons, November, December. Let's see what the market tended to do around those calendar months. Again, if we do have questions, I'll try to take those questions first. Okay.
Perfect.
And so let's go over pre-market report. These are stocks trading in pre-market hours. We have our most active stocks, our biggest percentage gainers and biggest percentage decliners. I'm coming down here and I see 40 stocks made our percentage gainers list, 80 on the decliners. From that perspective, we're looking like a more bearish bias at the open. I'm going to filter out down this list to only S&P 500 stocks. So we're going to remove from this list any small cap stocks, ETFs, leverage products, closed-end funds, preferreds. Take all those out. Only focus on S&P 500 companies. And I'm going to use this filter here in ETF. We'll drop it down. This filter lets me select one of the ETFs and from the list. By doing that, we're going to select SPY, which is the S&P 500 ETF. When we do that, the list below gets filtered by stocks that are holdings in that ETF. So now we have the holdings in SPY, which are the S&P 500 constituents. Here we see 7 stocks made our percentage gainers list, 17 on the decliners. So from this perspective, still looking like a more bearish bias at the open. The big one here that reported, Amazon yesterday, which is one of the higher market cap stocks, over 1 trillion, down 13.7% in a pre-market. They reported earnings yesterday. So over here, we see this little E indicating reported earnings. The N is news. And what I'm going to do is we could further, I usually just use this filter here, but if you apply more filters, it will narrow down this list even more. So what we could do is say, well, show me only stocks that are in S&P 500 and it had earnings. So by clicking that, now all these are S&P 500 stocks that just reported earnings either yesterday after the market closed, or they are reported today, before the market's open. We're not open yet. 9:30 we're open. It's 9:10. So here's a list of S&P 500 that reported earnings, right? So here, Intel, after the market yesterday, reported. You could see Exxon reported yesterday. They're making huge, massive amounts of money right now, cash flow from higher energy prices. Amazon here, big one, down 13.6%. That's weighing on the technology and the SPY. So you could keep also narrowing this down further. Let's say you want to see S&P 500 stocks that have earnings and are trading at a 52-week low. So click that, and there we go. 3 stocks on the most active. 2 of them made our biggest percentage gainers. Percentage decliners list, Amazon, EW. Why these 2 made the list, and over here there are 3. We have certain thresholds to make our decliners list. Gainers, this one I could see that just not enough volume in a pre-market, only 1,000 shares, 1,000 shares of stock. So that's how you could keep narrowing down the list using the filters. Of course, if you go to the screener over here, this will give you a lot more flexibility because it lists all the stocks, a lot more filters in this screener, and you have different views. Okay, so that's the pre-market. Let's move. By the way, Amazon was down. I think that they did guide earnings growth lower. I mean, it's something like midpoint. I think it was like 5% growth rate, and it looks like they're slowing down a little bit in their AWS cloud. So let's take a look at SPY.
Which is interesting because I know there were 3 or 4 cloud companies that reported pre Amazon.
Yeah,
and there was a leading indicator there, right? They were all reporting.
They were all
lower
saying,
growth.
so it shouldn't have already been that much of a surprise. I would say that, if you're paying attention to those big companies saying, hey, we're seeing slower growth in our cloud services.
Which was the same for Meta, right? I mean,
that is
the social media. Snap had reported, there have been other reports from social media companies about advertising and Google. So that, YouTube had slowed. So there was definitely
it's a trend,
a little bit of a heads up if you were worried about slowing growth, or you thought they might surprise.
Yeah, there's definitely, there's a slowdown. You're right. And Meta shouldn't be a surprise. I think also with Meta, it looks like he's pivoting his focus. Mark Zuckerberg is pivoting his focus towards a different direction and making huge investments in that virtual reality world.
The other thing that's coming out is no one wants to go into the world, which is a problem, right?
Yeah.
I mean, you've spent $15 billion so far on the Meta development, and you're not even close to your projections of users. And you actually have people in the technology space. There was a Microsoft executive who's involved in gaming, and the owner of Snap. Both of them said the last thing they'd ever want to do. I mean, this was yesterday. They were at a conference, a tech conference. Said the last thing they'd want to do was come home, put a mask on, and go into a world, right, in a computer. So the whole concept is being debated, right? It was like, it's almost like that was it was the top of a bubble in a bed. The metaverse, the coins, the whole space, is going to have to kind of reinvent itself, right? And figure out exactly how people and why people are going to participate in these functions.
Right now the market is not buying into it. They're definitely not giving a premium for it, so they're not seeing the same vision that Mark Zuckerberg. But one thing I have to hand it to him, he's still steadfast in his conviction in the metaverse. And sometimes that's how visionaries are. They're convinced, and they go, and they don't like you could lose $100 billion of your wealth and that's secondary. You have a vision and you think that, you know, that what you're working on is important, and it's going to, there's going to be a demand for it. So I have to hand him that, and you kind of have to be that way. Right now, the market though is not seeing it, right? They're not seeing that potential, and they're definitely not giving any.
Well, the market's pricing it like it's going to be a huge failure, right?
That he might have to scrap it.
I mean, if he scrapped it,
yeah,
there'd probably be a tremendous pop in the stock.
That's how the market is viewing it. And, I don't know who's going to be right. I think that, we'll see. We'll see. I don't want to make a call on that. I don't know. I don't know. Yeah, I don't know enough.
It's being debated real time in the stock. I mean, it's the classic value trap, right?
Exactly.
And it's about to catch me. I'm thinking about buying, a few more shares, but it's been tremendously painful. But you look,
what you do have is besides it does starting to look like a value trap. They do have a large audience. They have a large audience that they can tap into. And if you could figure out how to offer value and monetize that value, then, it could be a huge, because
their users actually grew.
Their users grew, right? So their users grew. They've got, over like 3 billion people using their platform. And that's very hard to replicate. You would think that you would be given a premium to that, and they're getting somewhat of a premium to it. Maybe the market is viewing that his focus isn't in the right place, right? So if your focus isn't in the right place, that potentially can be harmful, because then you're concentrating on something that could actually, you'd have to scrap. And by the way, a lot of people, they look at these companies and they think like, they make investments that don't lose. A lot of things that they try and invest in, it doesn't matter if you're Google or Amazon or Meta, you could read their press releases. Sometimes they're like, hey, we're taking losses on it and we're going to just shutter it.
Yeah.
We got to close it down. It's not worth it.
Or you look at the main man, Musk. I mean, he's got all these different moonshots. Literally, he was investing. And thing is, he wasn't doing it with Tesla Capital, right? They were outside entities, but he's taken shots all over the place. And within Tesla, they're working on stuff that doesn't produce any revenue, but people give like. So
yeah, for sure. It doesn't, and Tesla didn't produce revenue. I mean, didn't have profits for a long time, and Amazon grew without profits. Just gonna take a look here, Meta. Look, 5-year. This is your 5-year return, so you could see how painful it is to be a shareholder in Meta right now. And that it could turn around. I mean, they have a lot of talent. They have there's a lot of proprietary intellectual technology there that's worth a lot of money, right? So it's not like all bad news. It's not all gloomy, especially like when you get down here. Maybe it has some more to go. Who knows? You can't call it low, but it's not. It's not all that gloomy. But I think that the market just feels like he's not focused in the right direction. Maybe that's why we're seeing such a huge hit.
Well, it was probably 5 or 6 months ago. There was someone saying it was either Bloomberg or CNBC that so many of the tech stocks and crypto stocks that had run up were off 80-90%. When you had a full of the big tech names, the FANGs, were still near their 52-week highs, right? Well, that's all changed now. A lot of these stocks have given back now. So,
a lot of them, and a lot of the crypto, but the crypto actually is still a very interesting. I guess not the crypto, but that blockchain technology is still, I think, a very interesting sector that has a lot of potential. Maybe I'll get into it a little bit, but you know that we're still in the very beginning stages. I would say you're kind of like where before the internet there were message boards, and I think that's where we're at right now, like the message boards. You know, people first got a computer and then went on a message board and like said hello. Maybe we're not even that advanced yet.
Well, I mean, crypto has been around a while, right? It's not a new tech. The use of it and the use case scenarios, are still, 4 or 5 years in. But this is the third cyclical move in the cryptos.
Right.
They've had, this is the third, bear market basically.
And when I talk about the crypto, I don't mean like the coins are gonna. That's not what I'm talking about. Like these coins are gonna go up. But when we talk about what the potentials is, what they're looking at is how do you create. You have right now we have big growth in digital assets, right? Like digital assets are growing year over year. How do you take those digital assets, right? And you take away a centralized way of moving those assets, and being able to interact with those assets without clearing firms and big banks, and that could really unleash this new wave of an economic growth. So I'll give you like really quick, like maybe an example, right? I'll give you an example of what I mean. And right now we're looking at a web page, right? So here's a web page. It has a URL, SPY seasonality. Well, that itself could be a digital asset, right? Because this is a web page. It generates traffic. It could generate revenue because we could put ads on it. It could generate leads. It could generate, subscription. So it becomes an asset. But how do I transfer that asset from one person to how do I lease that asset, right? How do I get a loan against that asset? Those are the things that the digital economy is starting to try to figure out, with all these growths and values in the digital world. How do we transact them, right? How do we do it without middlemen, intermediaries? And the blockchain is trying to work out these types of, situations, right? Like what if I wanted to lease this one page for a month to somebody, that needed it for something, or sell it, or get a loan against it, the revenue stream. Those are the things that the blockchain, one use case that the blockchain can help with. Does that make sense?
Yeah.
People, hopefully. So let's get back to SPY.
Hey, we did have a quick question from Chris.
Yeah.
He was asking, this may be a little late, but have you ever given a thought to a married call screen?
A married call screen?
Yeah. That's just a buy rate screen, right?
I guess you mean like a screener for buy rate?
Yeah. Well, married call strategy is a reverse of the married put. An investor will short investor will sell shares of the underlying stock while purchasing an equal number of call contracts. So it's actually the opposite of the married put.
Say it again.
In a married call strategy, an investor will sell the shares of the underlying stock while purchasing an equal number of call contracts to protect the short position.
Like the reverse of a covered call.
Yeah.
So it would just be a reverse of a covered call. You could just look at the covered call screen and just do the reverse of it. It's basically the opposite side. But when you're doing that synthetically, you're buying a put, right? If you're buying a call, shorting the stock, it's like synthetically buying a put on that strike. We could go over it, but I don't have enough time right now. Just 5 minutes.
Maybe we'll take a look at it, Chris, going forward.
Yeah.
I guess the thing with that though would be the short stock. A lot of people, their accounts don't allow for that, right? That would be
Right.
part of the
So
problem.
So one of the reasons I don't put it up there is that it's, and Will's exactly right. There's a problem with borrowing stock that people don't realize. And one of them is, first of all, it could be hard to borrow. You might not be able to borrow it. You might get called in on the stock. So you think you're hedged, and all of a sudden you gotta buy it back. Even though you have a call against it, your clearing firm might not be able to locate that stock. And the other major reason is the strategy will not work a lot for retail investors, because when you short a stock, right? When you short a stock, the assumption is that the money comes into your account and you're going to earn the risk-free rate. So like 3%, let's say, right? A lot of, and you kind of have to do it to make it work, right? Otherwise, it would be very hard to price and not worth it for you to do it. So you go out there, you short a stock, money comes in, your clearing firm does not pay you 3%, right? Let's say they don't pay you, they pay you 0 on the cash you have in your trading account. If that happens, then that call that you bought is overvalued, right? That means you shouldn't have paid as much as you have, because the Black-Scholes model assumes that you are getting it, right? That it assumes this is the correct price and that you're going to get that risk-free rate. So that's number one. Number two is that if you short that stock, not only are you not earning interest, but you might be paying your clearing firm to borrow that stock. So on top of it, if you're paying your clearing firm to borrow that stock, it's a double whammy. In other words, you should have just bought the put. You shouldn't have done the synthetic. And that's, I have to go into it and explain it. It'll take me maybe like an hour or two to really explain it, why you should be probably doing the put and not doing what you just described, because, the way options are priced, and they're priced because, the broker dealers will get that risk-free rate, and they're going to be able to locate that stock. They're the first in line. So that's why they're priced that way, but you can't compete with them. And what will happen is that in reality, you should have been probably going for the put and taking advantage of that, the broker dealer, where they're making the markets, instead of trying to do the synthetic short. All right. Does that hopefully makes sense? So remember, you're shorting stock. You may not get that risk-free rate. You're not earning interest on that stock. In addition to that, your broker might be charging you to borrow it, making that strategy a losing proposition. In other words, the alternatives, you should have just bought the put.
Yeah, you got to be very careful with the interest rates and what you're actually getting, if you're getting anything.
Yeah, especially we're at 3% now, going to 4%. At 0%, it wasn't, you didn't feel it as much as you will now, and
like
finance.
I was going to say, we could do a whole show. I mean, people now are looking at put spreads to try to capture the interest rate. When I say people, I'm saying market makers on the floors, because I still, they're trying to do these big spreads, a lot like dividend spreads, to get short the stock, because the market makers are very attuned to what they get for short stock, right?
And it'll come down. As a trader, cost of carry is always something you're looking at. Always, look, an amateur will always look at direction. They only think that way. I have to predict something's going up or down. The starting point is not the same thing when you're a professional. You're always looking at that. What is the yield? What is the cost of carry? What is it implied in the marketplace? It's probably more often your starting point than even the volatility. Then you start looking about and so forth. But you need to see that the cost of carry is in line, and if it's not, you got to figure out why.
All right, great job. We're right up against opening bell. I just heard a ding, ding, ding in the background, buddy.
All right. Okay, I didn't get to really quickly. Look, right here, October, we're up 6.4%. Heading in. You know what? I'll do this. I'll do this on Monday. We still
All
have
right,
time.
we'll look at SPY on Monday and the moves, and it is interesting. We didn't even talk about. We talked about a lot today. We didn't get into the CPI print in Germany. Any guesses?
Yep.
Up over or under 10%?
I would have thought like it's at 10%.
It's 11.
11%. Wow.
In Germany, yeah. So I don't know. It doesn't seem like things are slowing. We'll see.
No, yeah, not on the inflation front, not yet.
Yeah. Well, that's what people are betting, right? Markets, held up nicely because they think the Fed is going to soften their stance sooner than later. But anyways, let's have a good weekend, everybody. Great trading day. Thanks, D.
Yep. Thanks, everyone. Stay safe out there. Have a